Market conditions majority bullish. S&P futures down slightly this morning at the market open. You can see these four real small bars that we've had over the last four trading days. Relatively tight consolidation here. Not interested in moving up one way or the other as of now. Kind of waiting for some kind of catalyst at this point. We'll see if we do start to get a little bit heavy here. We are in a really expanded trend currently. We're at the top of the trend, all-time highs, and so now the question is, what is the probability of continuing at this magnitude towards the upper end of the trend without some kind of a consolidation? We started that little bit of a consolidation right back here, so there is definitely some selling that's taking place towards this range, the upper end of this range. Now we want to see if that starts to happen again here as well, and if so, where are we going to find some support where demand might be coming in? So we'll see what this week brings for us. S&P closed out 14-0. The talking points that we had last week were primarily around breadth, as well as a rotation into small cap names. We'll get to that chart here in just a minute, but we're seeing number of stocks above the 50-day moving average sitting at 58. What that represents is 58% of the S&P 500 stocks are trading in uptrends above, at least above a 50-day average trend to the upside. That's not real strong participation, particularly when we're at all-time highs. So that's one of the internal breadths that could be softening. On the flip side of that, it could be strengthening because we were at 50%. We're moving back this direction. So we could get a push where we get more kind of some FOMO, everybody's buying back in and it pushes us back to the upside. That could be a really, if that were to happen, that could send us up pretty aggressively and maybe create kind of that euphoric type of a top. If you look at that weekly time frame, we're at a range here. We're at the upper end of the range, similar to where we were back here, but we're also similar to where we potentially were here. Okay, it's just it's how long does that take? And in terms of weeks, this is a weekly chart, so this is about 4 or 5 months. Okay, this is 4 or 5 months. We've now had 4 or 5 months of rally, and let's see where we go from here. But this is a risk management tool to say we are very extended in this trend, very extended in this trend. What size of position do I want to have? How much exposure do I want to this risk, to the market as a whole? Any positions that I have open are market exposure or exposed to market risk. So do I want a lot of positions or do I want a few positions where we're at in this overall trend? So part of the analysis is analyzing where are we at in the trend and what does that mean for our portfolios at risk. Now, if it's really long-term holdings, you're buying S&P 500 or 401k, long-term money like that, it's buy and hold it and buy into that market and trust in the overall human expansion process and idea. I think in the long term that suits the vast majority of us very well. But in terms of being a little bit more tactical and strategic in terms of how you want to be able to manage that capital, this is a good way to be able to do that. Let me move on here. We've got VIX, which is having a little bit of a spike here, 15 this morning, moving back up to yellow. You can hardly see that, but it is moving back up a little bit with this downturn. It's not a downturn really, just some softness in the market currently. We did see some strength in the Dow. We saw some strength in the Dow and the Russell 2000 last week. Dow is now creeping into all-time high territory. In fact, that is an all-time high, I believe, for Dow now that we've captured that. This might be close to that as well, but I think we're there. So we're expanding that trend. We had some soft consolidation inside of this supply block. Supply block meaning this is our sell-in location. So now we've pushed through the bulls. The buyers have pushed through that area where sellers may attempt to push things back down again based on where selling started to happen over here. It started to happen here. We got the sell-off. If there's a place to start to sell, it's going to be here. And it tried. The market tried to push it lower, but there's just more buying demand still taking place here in the Dow as well. That could bode well for markets as a whole. That being said, we are at all-time highs and not a whole lot of fear taking place in the market at this point. Triple Qs we're seeing same story right here. Expanded 236 now is at the breakout point back at 540. Breakout point meaning this area here on the weekly time frame, you can see where we broke out of that demand block, and now that's our retracement location back to that 540 range on tech. So that if we do get a retracement, that could feel pretty nasty if we were to retrace all the way back to 540, but it would still be in bullish momentum. So be aware of that we are pretty extended, in a retracement, even though it could be deep, would probably just pull us back to these breakout locations. Not happening as of yet, but that's why we do these updates daily, is because we want to see what's the market doing today, and what do we need to be paying attention to. IWM, we talked about that. You can see here on that a weekly time frame, a little bit of a topping tail bar happening on that weekly time frame, back up in supply of Russell 2000. So we're getting some strength here, but we'll see if this giant supply block pushes small caps back down again, or if we can push through that. If we can push through that, that could be interesting as well. We're now getting into some seasonality where we get August, September, October, which are relatively volatile and bearish, and then going into November, December typically is a little bit more bullish. So we'll see if seasonality creeps in here as well. The chart on USO, back still right around this 50% range, holding steady there. Keep an eye on that for oil. If we do get 2 or 3 or 4 days of support, some demand coming back into oil, this would be a location. If not, the next real spot is going to be down at that 69 range. That also is going to correspond to this most recent price activity happening here. That could be an area of demand if we do get some additional selling in oil. GLD still holding this big, massive long-term uptrend. Really no changes in this price pattern. Still in the momentum zone. Let me grab this low point right here, and we're sitting at 300. That 298.40 range is held for a long time now, since April, and still a really bullish chart. This is still quite bullish, watching for potential breakout in gold. And if that were to be the case, it kind of feels pent up, like the gold bulls are waiting for a market correction, or waiting. They just don't trust this rally and holding on to some of those hard assets like gold. But it's been flattening for quite some time right here. A dollar also showing that weakness. 2-year Treasury at 375 this morning, still majority bearish. On the weekly time frame, we squeeze this in, and still having that flat consolidation type price pattern, which is fine. We don't want to see a ton of volatility in bonds. Seeing a little bit of strength here in the 10-year Treasury, that's 431. And still majority bearish there, but those rates really haven't done a whole lot since a lot of the tariff discussion back in the spring. A couple stock ideas to consider. Solar is having a run here this last couple of days. You're seeing 2 or 3 names. SEDG, which is Solar Edge, nice confirmation bar. You're also seeing First Solar, which has got nice confirmation bar, big volume. All those have big volume. RUN is also a Sunrun. That's also a solar name. So keep an eye on that list. Today, those could be some movers, as you're seeing some interest there across 3 names. That'll do it for today's update. Everyone have a fantastic day today.